I think we should be using AI as traders as kind of almost our trading companion, our trading coach. You can train it to be kind of whatever you want to be. And post analysis is an amazing way to use it to have, another set of eyes, or, machine eyes, to take a look at, your actions and grade yourself, identify weaknesses, identify things you did well as well. Which stocks should you pick to analyze? I think very simply, you should focus on your top 2 or 3 and your bottom 2 or 3 first. Start with those. And then if you've still got energy, still got time, start with your next worst 5 and then next best 5. Trade decisions must be grounded in the information available at the time. And you want to be strict with yourself, but also kind with yourself. Don't be too hard. You just want to kind of identify things, acknowledge them, and try to improve over time. In addition to studying your best 5 trades and your worst 5 trades over a certain period, whether it's a month, 3 months, whatever, I also think it's crucial to study the best opportunities during that span. So not just looking at your trades, but also studying, was there a leader that you missed? Was there a momentum gapper that did amazing and went without you? You didn't even see it until it was already up 25%. You want to do this regularly, weekly, monthly, or yearly. I think weekly or monthly is the way to go. And then think about, for each of the situations, how could you have gotten that stock on your radar so you could participate in that move? So here's some thoughts. I think the entry was an A+, but there are alternate entries possible against the 21 EMA or on the positive expectation breaker. So if we go back to this bar right here, could you have started your position on the 21 EMA, an undercut and rally type trading this range? And then on the next day, we have a gap up and hold setting up within this pivot. Could you have put them on an anticipation trade? That's something to think about if that's part of your trading style, and then more added on this day versus be starting a whole new position. Then on the sell, this is really where this trade has some weaknesses. You sold all of a top leader when you still had a cushion above the 21 EMA. Selling it all here when you already had a cushion in the top leader, that's a mistake. And that's something you want to recognize in the, after the fact, and try to improve at going forward. Welcome everybody to the next Traders Handbook webinar. Today is going to be a really good one, focusing on analyzing trades and post-analysis. Yesterday and the previous webinar, we talked about kind of the analytics system level side, tracking your trades, identifying your batting average, average gain, average loser. Today is more, focusing on a specific trade. When in that webinar, I talked about, focusing on your best 5 and your worst 5 trades to actually go in and analyze a little bit more. And today is kind of the process to do that. And I think this is the best way to improve as a trader, is looking back on your trades, marking up charts, your entries, your exits, and actually seeing, did I enter right? Where did I place my stop? Should I place it somewhere else? And then on the sell side, I think it's equally important, almost more important, did I choke off the trade? Did I sell too soon? Did I obey my rules? Or did I, sell too early, sell too late, all of that. So this is probably one of the webinars that has the most potential to help you transition from unprofitable to profitable, boom and bust to more consistent. So that's what we're going to be talking about today. And before we get into it, I just want to mention again, make sure you order your Traders Handbook soon if you want it on launch week. I think there's actually a special deal right now on Amazon where you can get a special offer. We don't control that, so that could be a very limited time. So definitely go ahead and scan this and check out Amazon to pick up another copy. It's a great gift for a friend as well. So if you've already ordered one, maybe you ordered the Kindle version, pick up the Handbook hardcover version as well. And likewise, I like to have both so I can listen to something on the go and also read it and take more in-depth notes. All right. And then this is awesome to see. This is actually the first person who tweeted out that they got the handbook in India. Apparently it's available already in some bookstores. He's already taken some nice post-it notes here, so that's so cool. So thank you, Keshav. And he says, you guys have done it. Finally, a book that's worthy. Addendum to William O'Neill's work and Mark Minervini's work. Absolutely loved it. Great to hear, and really excited to get more and more of these into your guys' hands and hear your feedback, and yeah, just see what you guys think. So it'll be great to get this resource finally out there. We've been talking about it so long, and just looking forward to May 27th and that launch week where more and more of you guys will get your hands on it. And then this is just a great testimonial from Stan. We sent him an early version of the book to get his thoughts. Here's what he said. The Trader's Handbook is a clear, no-nonsense resource for anyone serious about improving their trading. It's rooted in common sense, sound technical principles, and most importantly, discipline. The authors focus on price action, trends, risk management, and teach you how to build a real process, not just chase opinions. It's a practical book that respects and emphasizes the core truth that the tape tells all. I recommend that you pick up a copy for your trading library, and that's, of course, Stan Weinstein, the author of Secrets for Profiting in Bull and Bear Markets, and the founder of Global Trend Alert. Someone who's inspired, almost every U.S. investing champion of the past, decade or whatever, and just a market legend. So it's great to get this feedback from Stan, and definitely you guys should listen to him and definitely pick up a copy if you haven't already. All right. And then just to sweeten the deal for this weekend only, so this is only for this weekend, if you pre-order and submit your receipt, and there's emails about how to do that, you will also get a $100 TraderLion gift card. And that's not all. You'll also get a free month of the Trade Lab, which is my service, daily reports, education. You'll have full access to the full archive where you can look through the model book, case studies that I'll talk about later in this video. But basically, only if you order by this weekend, you'll get a $100 TraderLion gift card and 1 month of the Trade Lab. So a nice bonus here if you order now. And again, you can scan here to place your order. But yeah, this is more than worth it. This more than pays for the book. So definitely go ahead and pick up your copy if you haven't already. If you need one more incentive, this is a great one as well. And yeah, we'll be sending out a free month of the Trade Lab to anybody who already ordered as well. All right. And then I just want to emphasize as well, this is really more than a book. By purchasing the book, you also unlock all these different bonuses and resources. You get the Trader's Handbook educational course, which will house all the webinars that we've done all in one place for you to review, the bonus educational articles and guides, the log that I sent out, the trade log, the companion workbook, the weekly charts model book, the base breakouts model book, the sell rules model book, the market cycles model book, an exclusive Q&A that will be during launch week. And as I mentioned, you've got the bonus momentum trading setups masterclasses on breakouts, gappers, and pullbacks. And this is new. There'll also be a Trader's Handbook community. I know a lot of people are kind of fed up with the existing social media, having a lot of bots and all of that. So we're kind of creating for everybody who's purchased the book, a special community where you can exchange ideas, continue to learn, and collaborate with other traders. So this will be another added bonus for anybody who pre-orders. They get access to this community as well. So hopefully you guys are excited about that. And again, this is just more than a book. This kind of unlocks a whole, suite of trading resources for you, all designed to help you speed up your learning curve. All right. And then also want to mention, one of the momentum trading setups is webinars is next week, Advanced Pullback Strategies. This will be Wednesday at 6 p.m. Eastern, not 11 a.m. Eastern. And again, if you pre-order that, you'll get the invite for this special webinar, really discussing, early entry techniques, buying support, buying the 21 EMA pullback. How do you actually go about doing that while managing risk? And, this will be a really fun one. Looking forward to this. All right. So let's dive into it. Like I said, this is probably going to be my favorite webinar that we've done. Chapter 10 goes along with this. Analyzing your trades. Post-analysis, again, I think has the most potential to transition you from where you are now to where you want to be. By analyzing yourself, analyzing your past trades, identifying your strengths, identifying your weaknesses. That's really the key levers that you can pull to improve your trading over time. There's no doubt that you'll improve if you actually do the work, analyze yourself, and look at the results, look at your trades and see what you did right, what you did wrong. Try to do more of what you did right and less of what you did wrong. And we'll talk about that process here today. I wanted to start with this quote from David Ryan from actually an interview that we did with him about 3 years ago. My biggest learning experience was from studying my own mistakes. If you can be humble enough to admit that you're wrong, study where you went wrong, and then correct that, then you'll do a lot better in the market. That's a simple statement, but there's a lot of power in that. And David, tells a story himself about how, he had doubled an account or even more, and then gave it all back when he was an early trader. And what he actually did was went back and studied every single trade that he made. And he recognized some key mistakes like entering late, entering extended, selling too soon, selling too late. But if he didn't actually do that work, he wouldn't have become the market wizard he is today if he didn't do that post-analysis. And that's what we're talking about here today. All right. And, last week, I mentioned the feedback loops, the importance of this post-analysis, which is, this feedback loop here. This is the input, this is your system, this is the trade performance, and then you've got that feedback loop to analyze everything and adjust your system. Without this feedback loop, there's no way to improve. There's no way to identify what you did well, what you did wrong, and improve your rules, improve your system unless you have this special feedback loop, which is what we talked about with calculating your stats, and then today with analyzing individual trades. And again, this is what we covered in the previous webinar, kind of from a high level, identifying key trends in your system. And then here we're getting to the trade level, analyzing system execution, identifying execution weaknesses, and potential improvements to tweak your trades over time. So here's the agenda today. This will be a lot of fun. First, how to pick trades to study. How do we actually go about that? Then key steps to analyze a trade. Then we'll talk about drawing conclusions, how to do that. And then there's a nice bonus here. AI, we want to be leveraging that in any way, shape we can. And I'll talk about some different prompts that you can use. You can give it a screenshot of your marked up chart, ask it for feedback. So I'll share some of the prompts that are great starting points. And then in addition to that, we'll be going through some full examples of some trades, how to analyze an entry, how to analyze an exit, really get into the details here. And then at the end, we'll talk about studying the best opportunities, because it's not just about studying your own trades. It's also about studying the best opportunities that you may have missed and trying to learn from those both on a weekly, monthly, and yearly basis, studying the best market leaders. We'll get more into that in, I think, the next webinar talking about model books, but we'll touch on that here today, and I'll show some examples from the Trade Lab that I've done for those folks. All right, so here's analyzing trades from a high level. First, it's about trade selection. Which stocks should you pick to analyze? I think very simply, you should focus on your top 2 or 3 and your bottom 2 or 3 first. Start with those. Go ahead through the process that we'll talk about today. And then if you've still got energy, still got time, it doesn't have to be a sprint. You can do this over time. On the weekends, that's a great time to do this. But then if you've got more time, start with your next worst 5 and then next best 5. And just focusing on those tail ends, your best trades and your worst trades, your best 5, your worst 5. Just analyzing those will give you the majority of the information you need to identify your strengths and weaknesses, because your best trades will be in the strongest stocks that you can analyze your routines. How did you find them? How can you replicate that going forward? How was your entry execution, your sell rules? How that different from worst performing trades? And then your worst trades, this is probably your greatest area for potential improvements, because you can analyze, how did your risk management fail here? Did you enter and then there was a gap down? Because sometimes it's not all in your control. So you really want to grade and analyze your trade based on not necessarily the results, but your execution of your system, and how you executed based on the knowledge you had at that time available. I'll talk a lot about that today, being intellectually honest. So yeah, from a very high level, look at your best 5 and worst 5, start there, and you can always do more if you've got more time, more energy. But just doing that, I think every month or every 3 months will be game changing for your performance, and you'll start to recognize tendencies that you make in your best trades, your worst trades, and hopefully you can do less of what hurts you and lean in more towards what's really beneficial to your trading. Then after trade selection, it's all about collecting info about each trade that you're analyzing. So what did the chart look like before the setup, before the breakout? What were you thinking at the time? What was the news catalyst around that situation? What was the market doing at that time? Because that's valuable information as well. Then once you've done that, you want to analyze your entries and exits, mark it up on a chart, and then draw conclusions based on that chart. So let's go ahead and dive in forward. So first, on collecting info, here's a little bit about what I think you should grab. You should look for the stock chart at the time of entry. If you don't have it in the background, go back in your charting software and cut off the right-hand side of the chart, before, after your entry point, and just, take a screen capture of that. And, just a little bit of logistics here. Where would you put this info? I think Google Sheets is a great way to start. I know some people like Notion. We'll be creating something in DeepView to make this really easy, where you can save model books and build model books all in that platform. So it's very seamless. But for now, Google Sheets, anything that's really simple and easy to use for you, whatever you prefer, that's where you should be saving this info. I know a lot of people use different OneNote. I think Oliver Kell, that's what he likes to use. So find something that works for you, and just makes it easy on your side. We want to make this easy, because if it's not easy, you're not going to do it. So don't hurt yourself. Don't try to do this extensive study in your trades if you're not going to be consistent with it, right? Consistency is the number one thing. So again, grab the stock chart at the time of entry. look at the screen or routine that you use to find the setup. I think this is a key thing that most people forget. We don't just want to analyze the trade in isolation. We want to analyze the process around that trade. How did it get on our radar? What were we thinking at the time? Again, what was the market doing? The news catalyst around that time? Why were you focusing on the stock in the first place? These are almost more important source, bits of information than your entry and exit, because that's so easy to study and tweak over time. But, how the stock gets selected and found, that's really key information that, again, can really change your performance over time. By focusing on better stocks, we get better results. Then, grab any journal notes you had about your thought process at the time before you enter the trade. If you have a daily journal, bring up those entries around that stock, and then any other relevant fundamentals or news around that time. Again, AI can really be really helpful here. If the breakout was on, say, March 24th, I like to, use ChatGPT and say, hey, what were the key news dates on March 24th or March 23rd? And it will go ahead and do the work and bring up articles and help you kind of identify what was going on, in real time during that point. So this can be really helpful for you. And then I mentioned this already, but trade decisions must be grounded in the information available at the time. And you want to be strict with yourself, but also kind with yourself. Don't be too hard on your decisions, because maybe the stock was pulling back hard that day, but also the rest of your portfolio was as well, and that's why you sold in a panic. You just want to kind of identify things, acknowledge them, and try to improve over time, but don't be too hard on yourself. Be kind to your past self, because everybody's gonna make mistakes. Even market wizards make mistakes. Just the difference between their mistakes is a lesser impact, and also they turn things around. They identify their mistakes earlier and are able to correct them earlier. So that's something that's really important, is when you're collecting all this info, make sure you're thinking in real time with the information that you're available. You don't want to, think about, 5 days later after the buy point, they announced this and that's why I bought. You want to think in real time and not be, a Monday morning quarterback and think in hindsight. All right. So let's get into analyzing entries. These are some things to think about. So first, you want to go back to your charting software to the exact moment of entry. View the chart as it was, not in hindsight. You can cover, with your hand or with something, the right-hand side of the chart, if that helps you. And then what you want to do is label the chart, entry point, setup area, key price and volume features. What was the setup or entry tactic I was using? Note that down. How would I grade this specific example? If you're being very objective with yourself, was it a good example of a range breakout or a VCP setup or an earnings gapper? Think in real time and how you would grade it in hindsight. Were there clear signs of accumulation, relative strength, the edges that you look for? Also think about this, was there a better, lower risk entry point? Were you forcing things at your actual entry point? And was there something better slightly earlier or slightly later? But the key thing is it a repeatable entry? We don't just want to say, we could have bought the breakout earlier, but if it wasn't on your radar, then you'd have to tweak something in your routine to actually get there. So yeah, think about if there are better entry points slightly earlier or slightly later. And that doesn't mean you have to change your whole system. If you do make an observation and find an early entry point, just think about that and make a note of it. And over time, if you see a consistent pattern of, I'm entering a little bit late, then you can go ahead and say, develop a new entry tactic or develop a new setup that allows you to catch things at the more ideal entry point based on the studies of your own personal trading. Then this is really key again, where were we in the market cycle? You can think about what the market was doing at the time. You can compare the chart to the market, or were we early in a cycle, late in a cycle? How did that impact your decision making at the time? These are all really important information. All right. Then it's all about reviewing trade execution next. This is your actual entry point. Was your actual entry close to the ideal? So again, for the entry tactic you're using, look at, say if it was an oops reversal and the actual ideal pivot is right through the low. Did you enter 3% above that? 1% below it? Grade yourself based on your entry and your rationale for entering. Why did it differ and what would you change? Think about that. Did you chase or enter late? What was your perceived risk reward at the time? It's really key to look at your initial stop loss, where that was if it fits your risk profile. How is your position sizing as well? Because don't forget that aspect to it. Was it too much or too little for the opportunity? So, think about where we are in the market cycle with this as well. If this was one of the first few trades, it might be fine to size only 10%. But if this was after you've gotten confirmation that the market is really getting going, you want to be sizing enough to fit the setup, fit where we are in the market cycle to benefit from that trade. So this is a really important question that, again, I think people forget, is you don't just want to analyze your actual execution of the trade, but also your sizing around it. Were you sizing too big or too low? Because both of those can have bad ramifications, and those are really key potential mistakes that, again, can transfer in a big way to your performance. Then also, just how is your risk management in general? Again, for stage 2 traders, this is probably the biggest question to ask yourself, especially when analyzing your losers. If you weren't managing risk correctly, you're going to start the trade off on the wrong foot. So you definitely want to make sure that you analyze this and grade yourself again from A to D about your risk management and identify things that you can do better. Then reviewing position management, this is pretty similar. What sell rules were you using for this trade? Again, there's a great question from Rachel earlier about, swing trading versus position trading rules. Make a note of which rule set you are using as you analyze a stock and any changes throughout, and then grade yourself based on how closely you adhered to your actual rules. We talked about a lot of sell rules earlier, using the 21 EMA, selling into strength, selling into weakness. Those are in the previous webinars. Grade yourself based on your existing system at the time, and don't if you notice something, like it went 100% after you sold, don't, again, think in hindsight and say, I should have known that was going to happen. I sold on a break of the 21 EMA, which was my rule, but it went off and took off without me. So I should have held through, and now I'm going to change my rule to the 50 SMA because of this one trade. It would have worked well. You always want to think in a long-term series of trades and what will work for you, your style, your personality over time. And even as you review these trades and analyze them and look for strengths, look for weaknesses, don't get too swayed by any one trade. You want to, if you notice something, make an observation, make a note, and then investigate it further and think about it further. And then over time, add that tweak in, test it. And if it works, great. If it doesn't, go back to the drawing board. Again, how well did you execute on those sell rules? Were there any emotion-based sells? This is a big one. And if there were, how were other key stocks in your portfolio or just the market in general acting at that point? Because that definitely impacts us. And I think, again, if we just look at charts in isolation, this day, it's above the 10 EMA, it's fine. But if everything, gaps up and then everything is down 4% in your portfolio, that's a huge swing in P&L if you're fully invested. And that's going to impact your decision making. So we don't want to ignore that as we're going back and analyzing trades. It's a really key thing to consider because that impacts your emotions, and emotions can almost bypass our objective system. So we want to always be thinking about that and think of ways that we can, address that and deal with that going forward. And then again, what tweaks could have helped your performance on the trade? But again, don't get too hung up on any one trade. We want to think in a long-term series and tweaks over time that will improve our system, not just, overfit on any one single trade. And again, remember to think in the moment and be intellectually honest, be kind with yourself, but grade yourself objectively as well, because we're in this to improve. And we want to be as objective as possible. We don't want to just sweep things under the rug. If you notice a key mistake that you're making over and over, make a rule to address that. All right, and then drawing conclusions. For each of these, stock selection, setup, entry tactic, risk management, position management, overall trade, give yourself a grade of A to D. And if you notice that your stock selection is always an A, but your risk management is a D, that is really easy. That means your risk management is your biggest lever, the lowest hanging fruit to improve your performance. Simple as that. Similarly, if your stock selection and entries are both A's and B's, but your position management is a C, then you have to work on your sell rules and go back, watch that webinar, read that chapter in the Trader's Handbook, and see if there's any rules that you need to add, rules that you need to take away, tweaks to your system, and then tweaks to your execution as well. So this process of grading this can be really helpful because over time you'll see patterns, you'll see tendencies of risk management, is consistently a C or D when my stock selection, is always a D. I'm focused on the wrong stocks. Then you have to go and analyze that part of your system and improve it. That's the key thing here. And then also grade based on the execution of the system with the knowledge at the time, not necessarily based on even the performance results of that particular trade, because you can have a loser that was well executed and you took your loss and moved on. And similarly, you could have a great winner that you ignored all your rules and, just kind of let go and, undercut your stop. You didn't sell and then it took off and it was a gain, but great. That's not consistent. That's not repeatable over time. So don't necessarily think based on performance that a stock or a trade was A plus or a D. Think about your execution of your system as well, and be objective and think in a long series of trades, would how I treated this individual trade have worked out well, made me profits, or do I have a lot of room to improve? And then think about what mistakes, weaknesses were revealed in this trade, what strengths as well. You don't want to just focus on the negatives, focus on what you did right as well. If you incorporated a new screen into your routine, a 21 EMA pullback, and you saw a lot of success of trades with that routine, that's something to lean in on and say, hey, I'm having a lot of success with this setup, this routine, this screen. I'm going to do more of that. So also think about what you did well with each trade as well. Don't be just negative. Then, what overall key takeaways you have or ideas for improvement. Again, you don't have to change everything based on one trade, but over time, you'll see the patterns, you'll see things develop and how to improve. All right. Yeah, and Jose says, this is the key to improving and being successful. It helps you take action in real time, 100%. And then here's the bonus slide here on leveraging AI. Again, I think we should be using AI as traders as kind of almost our trading companion, our trading coach. You can train it to be kind of whatever you want to be. And post analysis is an amazing way to use it to have, another set of eyes or, machine eyes to take a look at, your actions and grade yourself. Identify weaknesses, identify things you did well as well. So first things first, what you want to do is mark up the charts just like you would for actually analyzing your chart yourself. Label your entries, your exits, your rationale for why you did things, and include any of the indicators you used. And then upload that screenshot to ChatGPT. And then what you want to do is train it to act as your objective train coach and grade your actions, the setup, the execution. And, if you want to work on risk management, first and foremost, tell the AI to focus on that. And then you want to use really specific prompts to gain additional perspective. This is key when it comes to using ChatGPT. You want to be very specific with what you want to do. So, if you have very specific interest in terms of your post analysis, let it know and train it to do exactly that. And here are some trade prompts to get you going. Let me go ahead and zoom in here. And nobody's really talking about this. So this is a cool thing to start doing, because I think it definitely is helpful, especially if you don't have a trader friend that can also look over your trades. That would be helpful as well. If you don't have an AI or, prefer a human, definitely, go ahead and get a friend and exchange trades. You look at theirs, they look at yours. And, it's so amazing how a fresh set of eyes with a different perspective, just slightly different way of interpreting charts, can come up with amazing conclusions that you would have never thought of. So that's a good suggestion as well, but AI can be that set of eyes as well. So here are some review prompts. First, again, be very specific. Break down this trade like a top trading coach. What were the best and worst decisions I made, and how do I correct the mistakes going forward? Number two, dissect my execution versus the setup quality. Was this trade idea solid, but the execution weak, or was the setup flawed from the start? If I had to teach a webinar using this trade as an example, what key lessons should I highlight, and where would students likely question my execution? This is a really cool frame. Think about the individual trade as an example that you'd be teaching, and ask the AI to basically incorporate that. Then what specific rules or system upgrades should I add based on this trade's outcome and price behavior? Again, don't throw out your system based on one trade, but this can lead to some interesting results. How can I structure a repeatable plan to trade the same type of setup better next time from prep to exit? And then what I like to do is, after I use an initial prompt like this, I ask follow-up questions. I try to dive deeper into what they're saying, what are they noticing, and and then also just looking at the chart with a fresh set of eyes based on what they said, and see if I notice anything additionally. So this is pretty cool here. All right. And here's a sample chat here that I just did this morning based on the Palantir trade example that I have earlier. Here's another trade on a 65-minute time frame. Evaluate and act as a trading coach. What could I have done to improve? It graded a bunch of things, but there's a screenshot about the exit and gave me a grade here. You can ask it to give you a grade. What needs improvement? Coaching tips, all of this. It gave me a cool idea about the RMV spiking that I hadn't really thought about. We did have an RMV spike here that then failed, so that might have been an early warning sign. So again, I didn't notice that when I looked at the chart myself, but that might be something to look for later on to see if that actually is something to focus on and see if it's repeatable, and again, add to my system if it works over time. So yeah, hopefully this gives you some ideas about how to leverage AI to help you with this post analysis process. All right. So now that that's said, and hopefully you guys enjoyed the AI part there, I think nobody's really doing that yet, and we're going to be incorporating a lot of that stuff natively into Diffuse, so you won't have to go externally pay another service. So that's what I'm really excited about, the Diffuse journaling. It'll be so cool, but for the time being, you can use ChatGPT. But let's dive in now to an example and talk through this actual process, and not just talk in vague high level stuff, but actually show you, some real examples. So this will be of a few trades during this period of Palantir, from this gap up to all-time highs, all the way to recent price action. So here is the example trade one entry. You entered on this day right here with the gap up on all-time highs after earnings. And here's the entry tactic. You had a test of the anchored VWAP, which if you guys have pre-ordered and attended that webinar, is my favorite entry tactic. And then you also have the opening range breakout, the 5-minute here. That's your entry point. Your risk to the low of the day is 3.2%. And your cost is 48.46. I like to mark out the entry tactic that I use, opening range breakout. And then it trends nicely above the anchored VWAP and, has a nice cushion for you into the end of the day. So here's the daily chart. And again, your entry would be just about right here on the chart. So really nice, pretty low risk entry, 3.2%. And you get a nice cost. Maybe you could have entered a little bit earlier on the anchor VWAP, but that's something you would look at in terms of your conclusions. Here are the exits. So this is your initial buy. Then you sold one at 75.94 when it broke below this previous close after this gap up, after a short-term extended. And then you sold another fourth, down here, a little bit of a panic as it broke below the 10 EMA. And you sold pretty much near the low of the day. It recovered end of day and kept trending. And then you sold your last half on a bad day, breaking below this low and the 21 EMA after it failed to rally here. So this is the overall trade. Again, your buy here, sell a quarter here, sell a quarter here, sell a half here. So let's talk about, how to analyze this and what you could maybe done better. So I think the entry was an A+. You manage your risk tightly. You're entering at a break to all-time high on a nice gapper. Again, you manage your risk. You had a nice entry tactic. Execution was good. But, this sell, I think, was a little bit of a panic, given you had a really nice profit. And it was still, on a closing basis, still above the 10 EMA and trending above the 21 EMA. So this sell was more of, I give it a B- or C. So that's something to look at. Should you have a rule to hold until the end of the day when you have a profit of, say, 25%? That might be something to look into, knowing that, the short-term downward momentum, but it is a very strong stock in a leading theme, all of that, should you hold into the end of the day? And then the last sell, should you have sold a little bit lower, where because you saw this rally off the 21 EMA that then failed and started breaking below this low and this 21 EMA, that might be an area improvement as well. But overall, really good trade, B+, great entry. And then the sells might need a little bit of work, but, overall a really good trade. So that's kind of walking through this trade and how you'd analyze it from my perspective. All right. So here is the second trade. This happened a little bit after, this is where we broke the 21 EMA, then it set up a new base and had a nice gap up on earnings, and very classic. And we talked about this in the earnings gapper bonus webinar, a post gap range breakout. I love these. This is kind of my preferred way to buy a gapper, where we had a one day, it didn't really make much progress, but the next day, slightly undercut and was very tight, especially given this huge gap, and formed a nice tight range. And the next day we break out here, and this is the buy on a post gap range breakout. That's the entry tactic, cost 104.59, stop low of the day, which is a little bit far, 4.5%. And again, that might be an area to improve looking back on this trade, but overall really nice entry, and it worked nicely for a few days. But looking on the 65-minute time frame, again, this was the buy point right here above the high of that day. But if we actually look on the 65-minute time frame, you can really see that the range breakout started a little bit earlier, because the day before, this range was very tight. It set up an earlier buy point here, and early in the morning, this would have been a potential entry. stop loss of the day would have been 2% instead of 4.5%. So looking back at this, this might be something to look for post-gap range breakouts, is when you have a tight day like this, don't just use the high as the pivot. Look for an earlier pivot that might allow you to manage risk a little bit earlier. And just as an aside, this is something I always look for, tight ranges into the end of the day, because they often lead to explosive moves the next day if it's overall in a prime setup and you've got a good entry tactic. Sometimes it opens a little bit lower and pushes through. Sometimes it shakes below the entire range, the low of the day of the day prior, and then breaks through. Those are great, an undercut and rally, on an intraday basis, entry tactic. But this is something to really look for, is a tight range in a promising stock. And setting up a lower pivot can really lead to some great explosive moves while managing your risk within just a few percent. But that's an aside here. The key point here is that looking back on this trade, you might have recognized an earlier buy point than the one you actually used. All right, so here are the exits for this one. It progressed nicely, went from 104 all the way up to close to 128. But then you had one really negative day where we undercut all these lows in a row, and your sell was pretty close to the low after it broke the 10 EMA. Then your next sell was half on the gap down, and that's actually slightly below your cost, down 1%, right as it opened and started pushing lower. So there's definitely some things to look at in terms of these sells, because this was more of a swing trade mindset, and the reason being is because just earnings gappers in general is more of a swing trading type setup, but also you want to be recognize that at this point the market was a little bit whippier. Nvidia and MSTR had already topped, and I would treat this more as a swing trade than a position trade, because early on in a cycle when there's a gap up, that's a time to really hold and look for a position trade. But later on in a cycle, it's more of a swing trade type mentality. So these sells are definitely something to look into. Could you have sold some into strength as it pushed higher and then reversed lower? And could you have sold out all on this bar, because we're breaking this low, this low, this low all at once, very negative, and closing near the lows of the day. The expectation is fall through to the downside, so likely you should have sold most of your position on this day right here. So here are some takeaways. Entry B plus, just because you could have entered at that lower pivot with tighter risk. But overall a very good entry, and it's more the sells here that detract from this trade. So first sell, C minus, should have been quicker due to swing trade mindset, and sold the rest at the close. But maybe that's hindsight, because obviously we did gap down and go lower. You don't know that in the moment, but I do think you'd recognize this is a 3-bar break to the downside, very negative bar, down 9% after a nice easy trend. So a change of character that you should have taken note of. So overall a B minus trade. So that's kind of how I analyze this particular trade. All right, let me get some order here. The gap was after earnings. I see somebody ask. All right, so this is trade 3. This was after we had pulled back here and formed a base. The market was kind of shaping up at this time as well and looked to be going higher. And then we had the tariff news back in this area that caused the next leg down. But the trade here is, first of all, you've got a pivot right here, right at the 21 EMA. You have a potential higher low, and you first entered on this day, but then we're stopped out the next day on the gap down and pushed below this low, down 3.5%. I actually think that's a completely fine trade. That's an A plus trade, except for potentially the entry. There's not really a clear pivot here. It's a little bit wide and loose, but the sell itself was managing your risk just as you plan to. But in this trade, you bought it back as it recovered, firmed up, and pushed through 21 EMA. Stop was at the low of the day, 4%. I think that's completely fine. The stock pushes higher, you're up about 10% on the trade, but then the stock breaks down with the market, and you end up selling at break even for basically a scratch. So again, there's some things to look at this trade. I think this buy and sell here, the buy, there's not really a clear pivot, but the sell was fine. This buy was pretty good, but could we have sold some into strength? Should we have sold a little bit earlier, because we have a breakdown here? It tries to rally and then fails. And you want to protect your costs. Here the market's very whippy. We're in a correction, so you want to be thinking more defensive minded. So those are some things that I'm thinking about. So again, entry was B plus, not the cleanest pivot, but it was choppy. Given very choppy market, should you have sold a partial up about 10%? Would that be in your rules? That's something to look at to see if you'd add it, or if it's not in your rules, maybe something to add as well. And again, maybe should have sold quicker based on failed recovery and loss of the 21 EMA, not waiting till it completely went back to your entry, taking the profit that you have in a very choppy environment. So overall, a C plus trade here. Then trade 4, entry. This was after, the next leg down. We had, moved higher, reclaimed the 21 EMA, and we have a gap above this range here. And you've got a nice pivot, a lot of highs lining up right here. And this is the 5-minute chart where you've got the anchor reclaim. That's the entry tactic here. Buy at 99.54, stop at the low of the day, minus 1.75%. So very tight risk. That's what you can get with these acre VWAP. And again, I talked about this in the bonus webinar on gappers. And by the end of the day, you do have some profit, but not too much. You can see it close mid-range, but overall is holding and is holding that gap and breakout above that range pivot. So here's the buy again. It progressed beautifully. The next day we reconfirmed higher very strongly. So if you didn't have too much profit on day one, you had really good profit on day two. Nice hold, but earnings were coming up and you decided to hold through because it's early on in a market cycle. This is a promising stock. This is the best stock in the market. And what happens? We gap down and you are kind of disgusted with yourself. Up here, you're up about 25%. Here, now you're only up 8% or so, and you sell as it pushes lower. It ultimately holds, and after you sold it, it rallies and recovers and goes to all-time highs, and we'll see what happens after here. So again, there's definitely some things to look at, both with the buy and the sell here. So here's some thoughts. I think the entry was an A+, but there are alternate entries possible against the 21 EMA or on the positive expectation breaker. So if we go back to this bar right here, could you have started your position on the 21 EMA, an undercut and rally type trading this range? And then on the next day, we have a gap up and hold, setting up within this pivot. Could you have put them on an anticipation trade? That's something to think about if that's part of your trading style, and then more added on this day versus be starting a whole new position. Then on the sell, this is really where this trade has some weaknesses. You sold all of a top leader when you still had a cushion above the 21 EMA. Yes, we had a gap down, but it was still a promising stock. Things were acting well. You had some nice cushion, and a way that you could have handled that a little bit better is, could you have sold some into strength before earnings and then plan to add some back if it holds and keeps going higher, or on a gap and go, add that back. Could you have sold some ahead of time so you lock in some profit? You've got a win, so you can mentally deal with a gap down a little bit easier, and think a little bit more objective because it's less of your account that's gapping down, and just in general you're in a stronger psychological position. It holds. You could reconfirm higher. This could have been an entry point through this high, or even on the hold of the 21 EMA, you could have added it back, managing risk really tightly, and then now it's back at all-time highs. This could have been another add spot. So selling it all here when you already had a cushion in the top leader, that's a mistake, and that's something you want to recognize in the after the fact, and try to improve at going forward. So hopefully that's a good example for you guys. So trade for conclusions. Again, maybe should have sold half before earnings, so psychologically you're in a stronger position. All right, so that's pretty much it for the example of 4 different trades, how I would grade them, entries to exit. Stock selection for this all in all is A+, because this was a top name, top momentum name, longer term uptrend, AI development, strong growth, all of that. So in terms of stock selection, it's A+, but you also want to look at that. And position sizing, we didn't touch on too much here, but that would also be something to look at for individual trades if you sized enough or size too much as well, depending on where we are in the market. All right, so the next part here is, in addition to studying your best 5 trades, kind of like we showed as an example, and your worst 5 trades over a certain period, whether it's a month, 3 months, whatever, I also think it's crucial to study the best opportunities during that span. So not just looking at your trades, but also studying, was there a leader that you missed? Was there a momentum gapper that did amazing and went without you? You didn't even see it until it was already up 25%. You want to do this regularly, weekly, monthly, or yearly. I think weekly or monthly is the way to go. And then think about, for each of the situations, how could you have gotten that stock on your radar so you could participate in that move? It's not necessarily going to change your whole style. If it's a penny stock that went up, ignore those ones, but the ones that fit your style, fit your entry tactics, fit your setups, think about how you could have gotten that on your radar so it would be on your focus list and you'd actually be executing that trade. Think about what setup, entry tactic you would have used, what edge you'd be looking for to identify that stock, and then also be realistic about trade execution. Could you have actually captured that trade? Not every amazing mover over a month is going to be playable for your system, but you can always learn something from a name, even if it's not part of your system. And the key question again is, what routine slash process would you have allowed you to get it on your radar, allows you to catch it? We don't want to think, we want to think, proactively and say, how can I catch something just like that in the future? What screen can I look for? What tweak to my system, my refinement of my watch list, what tweak can I do to get it on my radar and actually participate in that best opportunity? You'll learn so much by studying the best opportunities each month, each week, about what leads to big moves. And this is a really valuable exercise. And it's something I do weekly for TradeLab subscribers. TradeLab is my educational service. I do daily market breakdowns, setups, watch lists. I share my watch list. And then also each week, I break down the top opportunities from that week. And then each month, I break down a market leader case study, going back and studying their moves. So those are two ways that I study the best opportunities. And it's helped me so much, this exercise, to stay in tune with what's working, develop new entry tactics, develop, new understanding of existing entry tactics. And I think it's a really valuable exercise. And I actually want to show that. There we go. So these are the TradeLab archives. This is where you can find stuff. And then these are what I do weekly, TradeLab opportunity case study. I did one on the initial move here on this range breakout, and then one on the oops reversal opportunity after earnings. So I broke down both of those, each week. But here is what I do. So let me know if you guys can see this on your screen here, just to double check. Okay. So trade opportunity case study of the week. I identified the entry tactic and setup, the range breakout, and what was the reason it got on my radar? It was a post-news catalyst gap. So let's break it down here. So again, the purpose of these weekly articles is to analyze the top trading opportunity of the past week, is to improve our identification and execution of high-quality trade ideas that meet our setup requirements. Each article will focus on a stock that meets one of the three main categories of setups I trade: range breakout, VCP, tight area breakout, pullback to support, key moving average, or gapper or post gap setup. And this is a long list of ones I've already done. I've done even more since then. So you can see I've analyzed a lot of some great movers and learned a lot from these here. So here I've also got a special article on the oops reversal. I like to also include a chart of the index and what it did that week, because that'll be nice context if I go back and study this in the future. I can see what the market looked like while HIMS was making this move. Then at the top, I don't just like to analyze one stock from the previous week. I like to take a look at all the best opportunities. So I kind of highlight the best movers here. Duolingo had a gap and go move. Uber had a nice oops reversal opportunity up the right hand side. CRWV had the gap up and nice opportunity range breakout the next day. Roblox had a nice oops reversal before it continued higher on earnings. This is the focus of today, of course, HIMS, where we had a partnership news with NVO. It set up a very tight day, and then we had a range breakout this day right here. So then I dive into discovery. Again, the focus of this section is all about, how would you get HIMS on your radar? It's all well and good to study the move, the price and volume action, but you want to focus on the process. Anybody can analyze a chart, but how do you actually get it on your radar to analyze the chart and actually prepare for the next day to trade it? And I talk about that. You could have analyzed it looking for catalysts, screening for high volume gaps, or this was also in the highest volume ever, this gap up here. So that would be another screen that you could run to get this type of stock on your radar in the future. And then also, HIMS, another way to find it was on the TradeLab report the day before it started this move, because I recognized this gap, this tight day, and was watching this high and then this pivot here as potential entry points. So that would be another way to get on your radar if you're a TradeLab subscriber, is to subscribe to the TradeLab. Then the next section, I talk about the actual setup and trade execution. And I dive also into position sizing, what you should have sized it, looking back, all of that. So, how much you would be risking with 3% stop. You could get to a 15, 20%, which is plenty in a HIMS, and how it acted. So this is an intraday time frame of HIMS on that day. So again, this was the tight day. And then this is exactly what I was talking about with Palantir earlier, except the variation here is we form that range into the end of the day, and then we undercut that range and move higher. And sorry, let me get this off so you can actually see. But basically, yeah, you see that range that forms at the end of the day. I actually labeled that on the chart. And then we get a gap up, a break below that range, and recovery. And that's when you want to enter here on these names. When you get a tight range end of day in a profiting stock, look for that undercut and reclaim of that range. And then we're off to the races. You can manage risk really tightly, 3% risk to the low of the day on these areas right here. And it acted well, got a great profit, into the end of the day, and you closed near highs and R3, the pivots. And then I talk about this exact setup, the undercut and rally of this range. You can see the range form, undercut and rally. That's the buy point right there. And this is it on the 65-minute time frame. So you can see how similar it was to Palantir, except Palantir didn't undercut the range quite as much. But again, this happens over and over. And this is what you'll learn if you study these best opportunities and look at how they start, how they begin. And that's when we want to catch it. And then we get fall through the next day. Beautiful. I talk about position management, how you'd be thinking about it as a position trader or swing trader. Swing traders, as mentioned, will likely have sold at least some into Strength Friday, and on further expansion, higher will be selling more and trailing the rest. They'll be watching for a break of the 10 EMA, 21 EMA to close any remaining position they were trailing. And I say HIMS could form a range here and pivot around the March 25 high, and does not want it to close that level. A big reversal low would be assigned for swing traders to sell out even more. So then I have some takeaways. And then I have some additional homework. I actually talk about more examples of the 65-minute range and entry tactics is read it after its gap. So these same setups and patterns will happen over and over, but if you don't study the best opportunities, you won't find them. And here's Reddit, very similar situation, range forms end of day, and then you get a gap and breakout from that range here. Tesla, very similar, is on the election, tight range in the end of the day on a 65, and then shake and take off afterwards. Here it is on a 5-minute here. So I always include some homework at the end of these as well. So going back to here, actually, let's go back to the next one. This is the next week's because HIMS actually was in play for 2 weeks in a row. So this is what happened. Of course, we rallied higher. Let me actually go to a better chart here. Where is it? There we go. So this is what happened that week. This is the entry point we talked about. It rallied higher, and then we had earnings. Swing traders would be selling into strength on this day as well. Probably more before earnings and probably be out. And then on earnings, we had the potential for an oops reversal entry tactic. And that's the focus of this week's trade opportunity case study. So again, this is the key catalyst that got on our radar. This is the entry tactic we analyzed. And then you have an additional entry tactic because it's still in play and still has momentum. So then again, I talk about discovery. How would you get on your radar? It'd be likely in your larger universe. There are certain days where a stock can make a powerful move. This is some observations that I made from a catalyst like earnings for a tight contraction after being significantly oversold. Then I talk about SEPA and trade execution, SOPs, setup, shakeout, recovery, all of this. So the same process. This is how I analyze the opportunities. That's kind of the overarching thing I want to message here. This isn't based, about HIMS itself. It's about the process. Going back, looking at entry tactics, ways you can manage risk, all of that. So hopefully this is helpful for you guys, and you can adopt something similar to how you guys trade. And again, always good to analyze, TEM and other opportunities each week as well. So in addition to the weekly stuff, it's also really helpful to study, model book stocks from the past. And actually, the one I want to talk about here is Palantir. Let me type in, find that. So each month I do a model book stock case study where I dive deep into a leader from the past. Palantir was pretty recent and time relevant, so I decided to do this and analyze the setups, the position management, how you could have entered, how you could have exited, how you could have gotten on your radar. Again, the same type of stuff. And analyze its different moves. This is the overall move. Driving factors, I look at what the fundamentals. Again, AI is helpful to find this. The stage 2 uptrend, and then I start with each setup. So here I analyze the earnings gap and power trend. What's really key and what a key takeaway here again is this tight day before we expand. That's always what we want to look for. Here it is on an intraday time frame, and actually we have another tight 65-minute range breakout. So again, this should be a key takeaway for you guys today is look for these. And then I talk about different aspects and parts of that trend. So again, really helpful to analyze model book stocks from the past as well. I talk about this range breakout that we just talked about as well. So yeah, that's a great example here. And to show one more, hopefully this isn't too boring to you guys, I want to show Nvidia. This is another one that I did. Analyze this great base. Everybody should study this base because it's so textbook. And again, I did a whole video on this as well. I talk about the overall move, the uptrend, the catalyst around it, the earnings sales, annotate the charts here. So this is the type of stuff I'm doing when I'm going back and studying a model book stock. and trying to train my eye to look for great bases like this in the future with great earnings and sales and a leader in the most promising theme. So hopefully this gives you an idea. Here's a weekly chart of that base. Here's the breakout, all of that. So yeah, hopefully that gives you an idea of how to study previous winning stocks. Here again is from the model book itself of the Trader's Handbook. Again, we made the model book so you guys can actually do this and have those model book charts available to study. Not everybody has the ability or the will to go back and in their charting software and go bar by bar. So we kind of annotated stuff for you and mentioned key takeaways. So hopefully this model book will be helpful to you guys. All right. Just want a reminder, that's pretty much it for today's presentation. Just to remind you guys to make sure you pre-order so you're able to attend this week's bonus webinar only for people who have pre-ordered the book. You can scan here to pre-order, and we'll be talking about pullbacks. I'll be talking about this Palantir pullback example right here, how you could have entered, manage risk, all of that. And with that, I'll answer any questions. And just one last reminder, definitely go ahead and order the Trader's Handbook. I think you guys can understand, the quality of the resource that we've created here and how much effort we're putting into these webinars that go along with the book. And if you guys are enjoying the webinars, you're really going to enjoy the book. So definitely pick up a copy if you haven't already. If you already purchased a copy and you've gotten the hard copy, I'd recommend pick up the Kindle version as well. I like to listen and read at the same time. Or if I'm walking my dog, I like to listen. But it also makes a great gift. So if you've already picked up a hard copy, no reason to not pick up one more, gift it to a friend, help them out in their trading journey. So thank you guys all, and let's answer some questions here. All right. Yeah, thank you for the nice feedback, guys. I'm using the plus version of ChatGPT 4.0 currently. From Kevin, follow-up question on yesterday's webinar. If a trade experiences a significant gap down exceeds the initial stop loss level, should it be excluded from the log sheet to prevent data distortion? No, it should be included. Every trade should be included and incorporated into your stats. But that is an outlier that you want to study and see if there's anything you could have done to prevent that. If it was on earnings, should you have sold more into strength or something like that? If it was just out of your control, that's going to happen. But it should definitely be included in your statistics, Kevin. Good question. All right. Let's see. Yeah, the DFU journal will incorporate a lot of the stuff we talked about, calculating stats, and then also will be helpful as an AI to talk through your trades, just like I showed here. That's what we have in mind. Yeah, and one thing about using AI, it has a tendency to be overly complimentary. So I always like to remind her, be objective, be strict, be stern, or whatever. So it doesn't just give you compliments and say nice trade. You want it to be real and objective. So maybe remind it as you do your prompts. All right. And I think, I use ChatGPT. I think you can use anything, but ChatGPT works for me, and DeepView will be the one that I use because we're really going to tailor that specifically towards traders and build in a lot of stuff that isn't available anywhere else, and really tune it to making helpful commentary. So a lot of the prompts will be built in, all of that. So definitely check out DeepView once that's available. All right. And for those asking about accessing the Trade Lab, basically, I'll send out email access to everybody who pre-ordered how to unlock your free month, but definitely recommend it. I work really hard to make that the best service possible, both from a real-time finding setups, analyzing trade opportunities, to also, being an educational aspect of it too, going back and studying the best trades, studying the best opportunities of the week. So I kind of have both the real-time aspect of finding new ideas, and HIMS again was mentioned the day before it started this move, as well as Reddit A-Lab last year, great examples. But also, again, there's an educational focus. So it's not just about, giving you guys the ideas, which we should always take and interpret and based on your own system, but also about education and teaching the concepts, teaching the edu tactics more in depth with a lot of examples. So definitely recommend checking out the Trade Lab. All right. PEB is positive expectation breaker. Range breakout is RB. Yeah, those aren't, we should replace those in the spreadsheet with yours. Those are just the ones that I use, but you should make that trade log your own and, tweak it how you would like to. There's a trial. If you purchase the handbook, you get a free month. All right. Perfect. JC says, Richard, I'm excited for the book. I think I might need a physical copy too for quick reference. I'm encouraged to see some familiar trading friends on the Zoom. Yeah, awesome. Yeah, great community here. And again, what's awesome is there's going to be a community of traders who have all read the book, all be on one place. Again, social media is great, but it can be noisy. There's a lot of stuff, other stuff going on. So we'll be creating a community of all people who have read the book, so they'll have the same foundation where you can talk, exchange ideas, exchange learning material, all of that. So that'll be a lot of fun. And again, if you pre-order the book, you'll be part of that community. All right. Yeah, if you pick up any version of the book, you'll be able to unlock the pre-order. Just make sure you submit your receipt. I think the link to that should be in. We'll send it out by email. We've sent it out before, but you basically want to make sure you submit that receipt through the form that I send out, and I'll send a reminder. All right. Yeah, I think a trade journal should definitely address unanticipated news, black swan events. So you can note that going forward, it's going to happen. But we can only manage risk with what we know in real time, and it's important to take note of that so you know how to deal with the next one, right? All right. So I think that's pretty much it for today. Just let me know really quickly, guys. What was your feedback on today's session? What did you like most about it? Let me know in the chat. What were any key takeaways that you had? And then also let me know if you've picked up your Trader's Handbook copy. Again, definitely stress if you want it during launch week, you pretty much have to order now. And this weekend, again, you've got that $100 TraderLion gift card that's available to you, and then also a free month of the Trade Lab. So some really good incentives to go ahead and pick it up this weekend if you haven't already, or pick up another copy as well. Awesome. Tom says got 3 copies. Awesome, Tom. You're the man. Yeah, somebody said using AI to help analyze trades is a good idea. Awesome. Jim, yeah, definitely go ahead and start doing that. It can only help you, right? There's a reason that athletes go back and study the tape, especially of games that they didn't perform well on, because they need to improve, and they're paid to play and they need to perform. So they'll do anything they can to get better, and that's what we need to do as traders as well. We're paid to perform, and we have to use every edge that we've got, and analyzing ourselves is a huge edge. Huge edge. Awesome. Yeah, thanks for the nice feedback, guys. Very nice. Yeah, and as Vikram, Trade Lab is where I present my ideas. It's not a real time alert service because I don't want to handhold people, and I want people to learn how to do it for themselves. I would love for you to join the Trade Lab and then learn and then cancel your subscription and be able to do it on your own. That's my goal here. I'm not doing an alert service because people don't learn from alert services. All right. Perfect. Yeah, so I'll try to have this recording up as soon as possible, and I'll send out an email when what's available. But again, just want to make sure order your Trader's Handbook. You can scan the QR code right here, and the link should be in your email as well. So thank you guys so much for your attention and for joining me here on this Sunday. I wish you guys the best, and we'll see you guys in the next one. Cheers. Yeah, and the model book in the book itself will be in full detail, full color on our website in the educational resource that goes along with it. So you'll be able to review it online as well. Nice, you got CRWV because of Trade Lab. That's awesome. Thanks, AA. Perfect. Awesome, guys. Thank you so much. Take care, everybody, and yeah, cheers.